past it was a sunk cost, but they still recognize as a relevant cost. I think the cost was purchase of labels that were purchased and something like that. Let me.
And in your opinion, it's supposed to be a sunk cost.
Yes, that's what I was thinking.
I'm actually trying to bring my slide also up here. Yeah, because I've seen that question in that regard. So let me pull up my screen here. Now, this is the note you're talking about that orange so yeah, the note III that they said each bottle of orange juice supplied have must have a Zan or Zonecom brand label. Is that the note you are referring to?
Yes, yes, yes.
The label costs 15,000 for a badge of 500,000, and if not used for this contract, they will be disposed of at a cost of 12,000, regardless of the quantity. So, what is your concern here?
So
Mm-hmm.
I was thinking if it will not be used for the production, it will be disposed of. So it is not
Relax,
relevant
relax,
in
relax.
this. That's what I
Take,
was thinking. All
but GD, take it
right.
easy, take it easy.
Okay.
So the concept is that each bottle must have the label. So this is an
Yes.
incremental cost to be incurred. Agreed on that level.
Yes, yes, yes.
Number
Yes, it
two,
needs to be okay.
it need to be incurred. Number two, they said that the label costs 15,000 for batch of 500,000, and if not used for this contract, they would be disposed at a cost of 2,000, regardless of the quantity.
Yeah.
So it means that this is a relevant cost that we have to consider in our cost build-up, because we will buy it. Although this order requires us to make how many bottle? Only 50,000 bottle. The label has
Yeah.
to be bought in batches of 500. So although you need only 50,000, the badge price, the policy is 500,000. So you would have to buy the 500,000 and then use it for the project in that particular case. So that is why it is going to become a relevant cost, because it's an incremental cost that we are supposed to incur. It's not like they've bought
Mhm.
it already and it is in store. That would have been
Mhm.
a different thing. I don't know if you are getting what I'm saying now.
Mm.
The
Okay.
statement
Okay.
here means it is yet to be bought, not that it has been bought already and it's in stock.
Talk. Okay.
Answer bro for
Okay.
seven.
That's good. Yeah.
uh,
Thank you.
so that is the idea in respect of that. What else we got? Any other questions for me? Something specific that you want to pick my brain on before I get goosebumps into my discussion? Okay, I'm seeing a chat coming up. What the heck? What the heck? What the heck? What the heck? So please, can you brief us on business process reengineering? Can I brief you? Maybe Harriet is not interested in business process reengineering, or you know, Francisca is not interested in that. Okay, business process reengineering. Yes, I mean it's one of the theories issues we're gonna be walking through in a moment. So definitely, I'm gonna be talking about that, Janet, as we walk through some of those things. Because question 2B, that 10 marks question, question 2B, will largely going to be based on those models of evaluation under the contemporary issues, right? So the benchmarking, total quality management, um, what else we got there? Environmental accounting, business process reengineering. So those encumbrances, value chain analysis. Yeah. So they will be coming in the question 2B, 10 marks that we need to understand. So yes, I'm going to be addressing, and that forms part of the 20 marks theory issues that the examiner will get excited about, that we need to also know about. So yeah, that's something I'll be talking about. So in the mix, it will come up as we go. Janet. Any other thing for me? Or we're in a comfortable lead? Thanks be to God for comfortable lead. That's a good thing. So let me bring back my screen then, and then since people are in a comfortable lead, let me see what I can do here. So there is something that I want to quickly draw your attention on, and that is a concept in variance analysis, which has a styling of questions, issues that I want us to talk about quickly. And we call them performance metrics to evaluate utilization and productivity of resources. So in variance analysis and as part of evaluating, there are ways for us to evaluate how we are utilizing resources and how productive these resources are. Okay? So as part of variance analysis, that's another styling of issues. So aside looking at, the issue in respect of material variance, labor variance, we go down a little bit to look at the labor and then the overhead factory issues, to look at utilization and productivity of the resources that we have used. And this is where these three key performance metrics come to play, and that is the efficiency ratio. Then we have the second one to be the capacity ratio. And then the last one is going to be the production volume ratio. So this is another styling of question under performance metrics in variance analysis sometimes. Other times too, it is looked at under performance measurement. So it depends. In my book, in our manual, we put it under performance measurement, but sometimes we could see it in the variance analysis environment, and it is a styling of question that I want us to get into quickly, then we can come back to the theory issues that we need to look at, and then the various examination issues. So this is an illustrative question we are looking at. Question number 5. It's available in the book on page 492 of the book. So let's look at that quickly. The last maybe question I want to draw your attention to, styling of question, before we go into the theory areas. So the requirement here is for us to compute and interpret the efficiency, the capacity, and then the production volume, or if you want, activity ratios. So let's see. The Ghana National Gas Company is a gas processing company and has a plant located in Echiabo, in the Echiabo, whatever, in the western region. The plant produces 3 gas products: lean gas, LG, liquefied petroleum gas, LPG, and natural gas condensate, NGC. The standard time for the production of the product is as follows. Stay with me carefully. So these are the standard time. The budget for the month of February is as follows: 45,000 metric ton, 25,000 metric ton, and then 30,000 metric ton. So we have the standard per pair, right? Per metric ton. And then we have the budget, which is in the total. Because one of the issues we need to understand is the difference between the standard and then the budget. So the standard is the estimated cost per unit, per ton. The budget is going to give us the data on the total. Actual data for the month were as follows. So in actual sense, the entity used 70,000 labor hours, and the actual production were as follows. So it is on the basis of this data that the examiner is now asking us to calculate these ratios. So let's begin the journey quickly, one after the other. What is the name of our company? Ghana National Gas Company. So Ghana National Gas Company. So first, we are looking at the efficiency ratio. Now, the efficiency ratio broadly simply measures the performance of the workforce. The performance of the workforce by comparing the time that they are expected to have used for the actual output produced and the actual time they used. So this is like efficiency ratio, direct labor efficiency variance, but you are going to be working in percentages here. So we are assessing the performance of the workforce. Were they efficient or were they not? So the formula for the labor efficiency ratio is going to be the standard hours for the actual units produced. So there should have. So maybe let me bring this down a little bit. Standard hours for actual units produced divided by the actual hours times 100. So how many hours should they have used? For the actual units produced, how many hours did they use? I hope you are getting the correlation between this one and then the direct labor efficiency ratio. Variance. Because I don't want you to see that we are doing something new. Okay. So should have. Let's go. These are the actual things they did. Give me a sec. Let me go through this in the party here. So we copy and paste. So these are the actual production. Okay. Now, we need the numerator, which is the should have. So we're going to multiply this by what? The standard. What was the standard? The standard was that for the LG, 40 minutes per metric ton. Now remember, from kg to 60 minutes, it's 1 hour. Right? 60 minutes is 1 hour. So if I'm dealing with 40 minutes, will be how many in hours? So we're going to do 40 over 60, 30 over 60, 45 over 60. Sekala? Because we are working in hours. So we go. LG will be 40 over 60. LPG 30 over 60. And then Ebaze 45 over 60. Can I have some answers coming up? You are multiplying up so that you get the should have. Okay? Which is the numerator, technically, in hours. So what we got? 40 over 60 times 48,000. That's 32,000. Then the next one, 30 over 60 by 27,000. 13,500. What else we got? 45 over 60 by 25,000. And that is 18,750. So for the actual units produced, the total labor hours we should have used was what? Or will be what? 13,500. 32,000. And that will be 64,250. So we should have used 64,250. But how many hours did we actually use? We used 70,000 hours. So efficiency ratio will now be 64,250 over 70,000 times 100. And let's get how efficient they are. So my answer over 70,000 by 100 That's 91.78%. What does that mean? What does that mean? Now, I want you to look at it first in the normal environment, the normal variance, direct labor efficiency variance. Ignore the percentage, just look at the difference between the should have and did. What would have this been? This would have been a favorable variance, true or false? Because they used, adverse variance, sorry. So they used more hours than they should have used, right? So this is adverse variance. Now, in the efficiency ratio environment, how then do we explain that? It means labor was inefficient below. So what's the difference between this minus 100? 100 minus 91.78. So 8.22. So we will say that the labor was about 8.22% below the normal efficiency. All right, that is the meaning, or the difference between the hours. So this means labor force was 8.22%, or what was the difference between the hours? 70,000 minus 64,250, 5750 hours below the normal efficiency level. Sounds good? That is the interpretation of the ratio. We are not doing anything new. We are just taking direct labor efficiency variance, but presenting it in another way for the issue in respect of that. Okay, so I'm seeing a chart coming up. What do I have? Also then, should the answer be hours or percentages? We are multiplying by 100. Okay, so it should be percentages. Thank you. So that is the answer to the efficiency ratio. Adverse under the direct labor efficiency variance. Here, they are operating below the normal efficiency level. That is the interpretation. Remember, the context of the question said you should calculate and interpret. And noting that the interpretation is coming up. So then we could be asked on the layer there, what are the reasons for this? And we will use the same reasons under the variance analysis. Do you get the idea? We use the same reasons under the variance analysis, which are what? Inefficiency in the budgeting process. Maybe there were some machine breakdown during the year. That is why there were more hours used than hours budgeted for. So because if there was machine breakdown, then it's not a fault of employees technically in that regard. That's why they are not efficient enough. So the same reasons that you would have used to interpret direct labor efficiency variance will also be the reasons attributing to this or attributed to this. That's the second one. Or that's the first one. Number two. So assuming you see a question like this in the exam, or if I hadn't told you, you will be like, oh, look at this thing. But it's easy, right? So the capacity ratio, anytime you hear capacity, we are talking about utilization in that particular case. We are talking about utilization in that regard. So the capacity ratio measures whether the total hours that are available have actually been utilized by the entity. That is the idea about that. Okay, so where the actual hours worked more than what we budgeted for or less than what we budgeted for. And so the flow for this is very simple. We bring in the actual hours that people worked divided by the budgeted hours. Again, times 100. So we need the budgeted hours. We don't have it, but we have the budget. Sorry. We have the budgeted output and we have the standard per pair. So you know the drill already. So permit me to bring the budget info. Be like this, be like that. Change your style. Be like that. And be like that. Like this. Okay. We know we'll divide by 60, isn't it? So the standard is still those things, 40, 30, 45. So by 40 over 60, by 35 over 60, am I right? 30 rather, then 45 over 60. Can I have an answer coming up? This is the budgeted hours. $45,000 by 40 divided by 60. That's 30,000 for the LG. No, let's say LPG. Then the LPG is half of that, so could do that easily. 12,005. Then the last one, NGC, 30,000 by 45 over 60. That's 225. So we add that up. What do we have? Plus 12,005 plus 30,000. I'm getting 65,000. So our budgeted capacity was 65,000. But how many hours did people work? People worked for 70,000 hours. That's a good thing, right? They work more hours than we have. So they have utilized our capacity and beyond. Now there could be loss coming in. What the heck? Yeah, there could be normal loss coming in there, but it's a good thing. So capacity ratio is actual hours worked, 70,000, divided by 65,000 times 100. And that gives us a base. And that's 107 point, maybe 7%, right? So the interpretation is that this means the actual hours worked was above or was more than the budgeted hours by 107.7%. Hey, what is just above the 100? 7.7%. That's the idea. So we did more than we had budgeted to do, right? That is the idea there. It's a good thing, subject to the fact that if we produce more units in that output level than we had budgeted to produce. Because if you check here, per our budget, we are supposed to do this, but we did this. So let's say in total, 45, 25, 30, that's 100. 48, 27, 25, that's also 100. So the budgeted unit and the actual unit is actually the same. I'm just adding them up, okay, because that's not part of the question, but I am going a little deeper because of the interpretation aspect that we need to understand when it comes to dealing with these things. So 48 plus 27 plus 25 is 100. If you check the budget, 45, 25, 30, that's also 100. So budgeted unit is more than, it's the same as the actual unit, but the entity used more hours than we had budgeted to use. So they are exceeding our capacity, but still getting the same output level. That's only a good thing in the grand scheme of things. Do you get the idea? It's not a good thing in a grand scheme of things, because I mean, the last thing we want is to have exceeding our capacity, which you will say, oh, mompre no, hey, but we are getting almost the same output. That's the idea in respect of that. But the interpretation, it means the issue in that case. Yes, that's true, Andrew. The mix is certainly different, so that could be contributing to that, because on the LG, they did more than they are budgeted for. On the LPG2, they did more than the budget. It is on the NGC that they did less than the budget. So yes, the mix could be also contributing to that in that regard. But that is the capacity variance. What you did as compared to what you were supposed to have done. Then the last one, production volume variance. I said production volume variance, sorry. Production volume ratio. If you remember under the fixed factory overheads calculation, fixed overheads expenditure volume variance is what? It's capacity and efficiency. The man I ever saw wahade. Okay? That's the same way we're going to be dancing here when it comes to the production volume variance. So we're going to say that. Then alternatively, I could also come from here. So I'm going to use two approaches probably to do this. Give me this formula, because look at something. I just want to show you something. It's like, okay, let me present like this. So efficiency times capacity. Because I want to show you something, you know, when you're learning. So if you check the efficiency formula, this is the efficiency formula. Okay. Just to show you something, I'll clean it and rewrite it. Okay, so this is the efficiency formula. You multiply that by the capacity formula. Do you get the idea? Like this. So what is synonymous here? You see that this will cancel this. Do you get it? The actual hours will cancel the actual hours. So what will you be left with? The standard hours for the units for the actual production divided by the budgeted hours. You bap? So that's the idea. Very easy. Okay. You did this in KG2 mathematics, but because you ran away from the math class, you see that now it's following you. Simple fraction. Some of you insulted your math teachers. Like, we did Pythagoras square. What is the benefit for Pythagoras square? Your face. So what is efficiency ratio? 91.78%. Okay, multiply by capacity, 107.7%. So what do we have? Then I will do the other presentation as well, the formula approach, which is going to be the standard hours for actual production. This divided by this times 100. So let's see what we got. Iridina, divided by 100. So I'm getting 1 point. No, times 100. 199. You can confirm me. No, give me a sec. 91.78 times 107.7 gives me this divided by 100. Okay, 98 point maybe 85%. The multiplication. Then let's do the fraction flow. Standard hours for actual production. We have that already. 64. They should have 64,250. We divide that by the budgeted hours, which we calculated here, 65,000 times 100. So what do we have? 64,250 divided by 65,000 times 100. Same idea, 98.85%. So the same idea in that case. Now, what does this mean? If you check so this is like mixed variance environment. So if you check, they budgeted 65,000, but they actually use 64,250, right? So it means that our actual production level was less than what we had budgeted for, which could be a good thing. So this means the actual level of production is less than the budgeted level of production by how many percent? This from 100 is what? So my answer minus 100, 1 point whatever, 2%. These are the things you must understand when we talk about these ratios. So I call it variance analysis Pro Max. So it's a styling of question that the examiner can throw at you that you need to know about. All right. So slide 1 there in that regard. Slide 2 coming up. And then if there are any questions about it. And then the final slide. So that is a workflow that I wanted to draw your attention on about this area, because it could be there on your variance. This could replace the variance question that the examiner could bring in the exam hall. So it's important I teach you. All right. So that was a calculation issue that I wanted to bring to your attention there. Now let's come back to our theory discussions. Now, when it comes to these theory issues, give me a sec. Permit me to go back into my slide, because there are a couple of things I want to quickly draw your attention on. Iridina, what I had here, I've missed my slide. Can you imagine that? Give me a sec. A sec. We are seeing. Oh. The things that okay, I think it's right out here. I thought it was on the Samsung, but it's right out here. So let's go. So we have mentioned on the overall that our management accounting examination, it's gonna be some calculation issues and then some theory issues. For the November 2025, we are looking at the examiner doing 65, 70 calculation, 35, 30 theory in the November examination. So whether we like it or not, we're going to be seeing a couple of theory issues coming in the exam hall. And as we have mentioned, the strategy is simple. You're going to be solving all the written questions first that you can do. All right, so we get to the exam hall, we're going to read through all the questions and then start with the theories first. And so we then asked, what are the theory issues that we need to be mindful of? We mentioned that under each of the topical areas, there are theory issues. So in budgeting, we have theory issues. The types of budgeting or approaches of budgeting, behavioral aspects of budgeting. In variance analysis, there are theory issues. We've spoken about them. In performance measurement, there are theory issues, objectives of transfer pricing, why EVA is better than NPV, why EVA is better than RI, residual income. So under performance measurement or management, there are some theory issues there. Then in the good old short-term decisions, quite a number of theories there, okay? The assumptions of break-even analysis, the limitations of break-even analysis, how we improve the throughput accounting ratios, then the outsourcing decisions, factors an entity must consider before making outsourcing decisions. All of those things are things that the examiner can bring theory in respect of that area. But then the significant portion of our theory, probably 1/3 or half of the theories we're going to be seeing in the exam hall, will be under the models of evaluation. All right, models of evaluation, which in your syllabus is under the contemporary issues. Okay, the contemporary issues. And so this is where we have the business process reengineering, benchmarking, total quality management, value chain analysis, environmental accounting, nyanga nyanga nya. All those guys are under this. Now, we have spoken about just-in-time system already in the previous discussion. We've spoken about total quality management as well in the previous discussion. So what I want to do will be to go through the rest of the theory issues that we need to be mindful of. Now, something like benchmarking and partly business process reengineering has become like a staple for the examiner. It's more or less like he likes the concept of benchmarking and that business process reengineering. I don't know why, but those are theory issues. But in addition to that, value chain, total quality management, just-in-time system, all of those things are also there. So those are the theory issues that we need to be mindful of. So about 10%, that is why I said the question 2B will be focusing on those models of evaluation, or if you want, the contemporary issues. Then in addition to those things, ethics is also here, right? Yeah, there is ethics in management accounting. And you know ethics already. It's not me that will teach you ethics again. You know, ethics. Ethics is ethics. All right, but these are the things we're going to be trying to see if we can go through them. So let me bring back my screen and then let's go back into my slide and let's see what we can talk about here. So contemporary issues, and we're going to go into. So we've done total quality management. We've done just in time. So I'm going to move my discussion on that level, come to benchmarking, then we'll go to business process reengineering, Janet, your question, and then we'll get goosebumps into it because I want to just walk us through some of these things quickly as we wind down our discussion. So, what is benchmarking? Now, let me explain the whole idea. The idea about benchmarking is that as an entity, we continuously want to improve and grow. It's based on the idea also in total quality management that we want to satisfy the customer more, we want to improve our efficiency, and we want to become the best of the best in the industry. Now, if you want to become the best of the best in the industry, then you got to look up to somebody, or you got to look up or set up some things within your organization. And that is the idea about benchmarking. Okay, so there is a desired life, there is a desired operation, there is a desired level of productivity that we want as a company. Okay, so we set that goal and then we analyze ourselves, where are we now? Then we ask ourselves, what can we do to get there? The benchmarking is also linked to something you're going to be learning in strategic case study, and that is the idea of gap analysis, which is where you are looking at what your potentials are and what you are achieving now so that what you can do to close the gap. So we are trying to close the gap and to become the best of the best. That is the idea about benchmarking. That's all we want to do here. We want to improve. We want to grow. We want to become the best of the best. You got to look up to something, and that now drives the way everything will be done within the organization. So some one-liner definitions. Benchmarking is the process of comparing an organization's performance metrics to those of best-in-class companies. To those of best-in-class companies. So, for instance, and I always use this example, okay? For us here at Premium Education Hub and the whole Nhyira Premium organizations, the things we do, one of the things we do is benchmark everything we do with the London School of Business and Finance. And so if you check the way we run our program, and then you look at the quality of our production from sound, presentation, our online platform, everything, it's to that level. So the benchmark is London School of Business and Finances. Okay, so how do they organize their program? How are they? And we've learned some of the things they do, right? So that is what helps us to also improve upon what we are doing as an entity. So when it comes to our video production, our live production, what do we do? Sound, everything. And that is why consistently you see us improving and adding various things. Why? Because we are comparing our metrics to the best in class London School of Business and Finance. That's the idea, okay? Now, it doesn't mean that the other institutions or Ghana here, there are no institutions. Benchmarking is organizational choice. Who do you want to become? You set your standard and you work towards that. So that's the idea about benchmarking, comparing our internal performance with the best in class. But there are types of benchmarking that we must understand. We have what we call first internal benchmarking. Here, we are not going outside the company, it is internal. So this involves comparing one business unit with another business unit within the same organization. All right? So it could be having different divisions within the organization. And then we are evaluating their performance. Division A, what is their outcome? Maybe using ROSI. RI. Division B, what is their outcome, to find out which of the division is doing well, which is not doing well. And because RI can be manipulated, okay, let's upgrade it a little bit to EVA, economic value added model. We analyze so that any organization that is not any division or part of the organization that is not doing well must pull themselves up to the standard of the SBU or strategic business unit that is doing well. That is called internal benchmarking. It could even be departments with other departments. So maybe it's a financial institution and we have various departments. So we have the credit department, right? They are the people who should go out there and get people to come and, how do we call it? Borrow money from the bank. Then we could have the investment unit. They are the people who have to go out there and look for people who want to invest the money. So these two departments, we can measure their performance. If the credit people are able to go out, qualify customers, and the customers are looking for money like $100 million, and the people who are supposed to bring in investment are just doing $10 million, it means the bank is going to collapse. We won't go forward. We got to sack all the people in the investment division. Because if the credit people have qualified 100 million potential people to give loans to give money to, so we can get returns, and the investment unit, who are supposed to go out there, convince people to come and put in their money in fixed deposit or other forms of deposit, are giving us just 10 million. What's up? We fire everybody. We sack everybody, so that they can pull their weight up a little bit. That is the idea about internal benchmarking. And we want to bring up the department that is not doing so well, which may be affecting the entire organization, like the illustration that I just gave with the financial institution. Then we come to the next type, which is the competitive benchmarking. The good news here is that the names will help you to understand what these represent, right? The names will help you to understand what these represent. So competitive benchmarking is the process of comparing your company metrics against competitors and the overall market. That is the idea about competitive benchmarking. So like the example I gave you earlier, if we try to compare the things we do here, quality of production, scope of study, cost structure design, and everything, teachers training and capacity building internally, all of those things with London School of Business and Finance, that type of benchmarking is called competitive benchmarking. That's the idea. Now, there is a limitation on this that we need to understand, because sometimes it is difficult. I mean, lack of access to information. It's difficult to just stand outside and say, I'm getting information about a competitor within the market if you have not gone through the system. So that's one of the limitations. And so the way these things are done very well is that the companies will actually engage the service of their competitor, the best in line competitor, using proxy individuals to see how they do their things. So for instance, let's say that I want to start an accounting firm, right? I want to start an accounting firm and offer quality accounting services to small businesses who KPMG, Deloitte, and Touche & Co. cannot serve. What do I have to do? I could go and require services from KPMG or Deloitte. Yeah, they're going to charge me, but I'm willing to pay. So I'll pay the money and ask them, hey, I'm doing this business. I have my accounts. It's a bit rusty. What do you have to do? Then they walk me through the process. Now, I may end up spending maybe $1,000 or below that, but I have gone through their experience to see, oh, when customers come, this is how they do. This is how they get the customers to sign them up for higher or high-level tier services that will give them more money. Then I'll pick those internal controls. I'm not interested in the service. I just want information. So I pick that, then I put it into my accounting services. Then I'm going to be offering the same thing so people see that top tier top level experience, but at a lower cost. That is the idea about that. And if the entity doesn't do something like that, then it will be difficult to do competitive benchmarking because of the lack of information. It may be difficult to study and analyze competitors' system. That's also linked with that, right? It's difficult because if you want to really study, like, you would have to go through the entire system. Even for us here, we've had people who enroll in our program, and it's not that they enroll to study, they enroll to just look at the way we do things here, and that's it, right? And we see them because we know various things, we do various things to identify some of those things. So they do that so that they can also go do what we are doing, or maybe increase what they are doing better at the end of the day. We see that. And we also study some of our competitors, so why not? It's normal. But sometimes it's difficult to study. The cost may be high, like the example I gave you a moment ago. Go and study KPMG, spend $1,000 or more. Not that you want the service, but you want to know how KPMG is doing their thing so that you can use that as a benchmark on how you will also run your accounting firm. Bro, that's quite expensive sometimes though, but that said, the information may be used to criticize staff sometimes. So those are some of the things. So that is competitive benchmarking. Okay, so we look for the top, the best in the industry, and then boom, we work with them. Then we go to the functional benchmarking. This is where instead of the whole organization with a competitor, we take a department, a segment, a part of our business, and we benchmark it against the best irrespective of the industry. Do you get the idea? That is functional benchmarking. So we don't take the whole organization. We just take a function, a department, a part of our organization, and compare that or benchmark that against the best of the best in the industry. So an example of that could be, for instance, when it comes to our live production, right? When it comes to our live production, we want to get to the point where we have a live production like the CNN. Yeah, because I mean, if you have a good TV and you put your TV on CNN, right? The quality of the camera, the quality of the production, the sound, the transition, like, come on, it's man. Then you come to Ghana here, the Yanum people, my goodness, about 99.9% of the media houses in this country, you don't know if the camera, if it is, I don't want to mention any phone name though, but you don't know if it is a phone they are using to shoot the thing. You don't know what kind of microphone they are using. Like, basa nyanga, you can't even see. So when you are somebody who are accustomed to quality stuff, when you watch CNN and you look at quality of production, the crispness of the video, the sound, and you come to Ayanum, oh my God. My God. That is functional benchmarking. So our live production, that is why we always make sure that we are having quality, sound. We don't joke with that, right? The video, we don't joke with that. The latency. So internet, very important. And we've invested quite a number of, different internet solutions to make sure that our latency is not, lagging. That is called functional benchmarking. You see the idea? Functional benchmarking. So just a function of our organization, benchmark against the best of the best. Now, CNN is not doing school, but CNN is the best in media production per our standard or per our observation. So how can we get CNN level live production in our production? That is called functional benchmarking. Next one, product benchmarking. as the name suggests, compare with companies producing what? The same product. Okay, what is their cost? What is their quality? How do they do their things? That is product benchmarking. And then the last thing is processing or process benchmarking, comparing the performance of one particular activity or process within the organization to another in a different industry in that regard. So this one, you are looking at your internal controls. Let's say onboarding of students. How is that done by another institution? Onboarding of students. Let's say marketing to get students. How do other people market to get students? So that is called process benchmarking at the end of the day. And these are the things you must understand when we talk about the types of benchmarking. So the names will help you. Then the examples I gave will help you. Now, one thing you must understand is this, and the examiner loves this, right? When you are defining or explaining something, bringing examples into it helps you to what? Explain what you are doing further, right? So you realize that the example, that's why I'm bringing some of these examples in there. And if you're in the same position in the exam, you could also do that, because the example brings the point home. So the same thing the examiner expects you to do, and he will love it. That you are explaining something, and as upon flow ye, then you can bring an example. Even if the apple is flowing well, the example still makes the apple richer. You get the idea? But it shouldn't be a long example, just a simple example. Then it qualifies the point at the end of the day. So that is the idea about types of benchmarking. Then the requirements of successful benchmarking. Number one, we select the key aspect of performance we want to benchmark. So what are we looking at? Because, I mean, sometimes it's difficult to look at everything. So what really are you looking at? We select that. It must be a continuous process, because, I mean, it's not just one time. Because when you think, oh, you are doing what you think the best of the best in the sector is doing, they are also increasing. So that's why we said this thing is a continuous thing, like total quality management, continuous thing. It should be a method of becoming better than competitors. So it's not like becoming like them. It's aspiring to become even better than them. So at a point you may get to their level, then you will go beyond them at the end of the day. And that is the thing that we must understand in that regard. And then when external partners are used to the system, when external partners are used, the system should be honest and what? Transparent at the end of the day. So if we are going to be engaging other people to help us to do this, there must be high level of honesty and transparency, so they don't feed us with, various wrong information at the end of the day. All right? Because, and that is what benchmarking does, like trying to be the best at the end of the day in that regard. I remember when we started our online education those days, even before like the COVID time, that kind of thing, like our audio was, like our video, everything. I mean, those days, if you watch some of those old videos, some are available on YouTube, like very poor, because, I mean, the sound was speaking just from a phone live into the Zoom that we were using. So the sound quality was very bad, very, very bad. But over the years, I mean, we've improved it we've invested, I mean, thousands of dollars into sound to make sure we sound well on everything, right? And that is the idea there, trying to become the best of the best in the industry. Okay. So those are the things generally that we need to understand. Some advantages of benchmarking. One, set as a foundation for performance improvement. Two, it helps with cost reduction, right? Because when you are benchmarking yourself, at the end of the day, it means you will see what your competitors are doing, so you can eliminate a lot of unnecessary things that you think you needed, which in reality are not needed, and boom, you reduce your cost generally at the end of the day. And that's one of the things that you must understand. It improves the quality of operation. I mean, bro, you are benchmarking against the best of the best. So you will become the best one day. All right. As it is said, the circle of your friends determines the outcome of your life. Is the same thing about companies. Next, it can be used both in the public and the private sector, and then it is an effective method of implementing change. But it has some disadvantages. One, benchmarking reveals the standard attained by competitors, but does not consider the circumstances under which the competitors attained such standards. And this is the trap, right? So you are comparing yourself with somebody. And you're like, oh, I wish my marriage is like this. I wish my life is like this. I wish I am like this. Do you know how they got to where they are that you are now wishing to be like them? Same thing happens in the corporate world. You want to be like somebody. Do you know the circumstances, what it took to be like them? That's one of the disadvantages. Number two, a bigger disadvantage of benchmarking is the danger of complacency and arrogance. Because at a point, you would think, yo, I'm the best of the best, yada, yada, yada. Hey, I cannot improve again. Yeah. That's one of the disadvantages. Because when you climb above and you are at the top, and everybody is looking at you, you will think you have arrived, so complacency will set in. And that's the idea about benchmarking, right? And again, everything we are discussing about benchmarking actually applies across board, not just in the corporate world, right? So this is where you have one miserable person like that who has bought one miserable car like that, or one miserable house like that, and then, all his or her friends are lower class people. It will care about no man abeti so. Complacency. Why? Because you think you are bigger. And that is the trap. Because in other words, if you have not been to someone's farm, don't be in your farm and be doing cho and say, I am the best farmer in this location. You may go somewhere and that thing you call a farm is someone's backyard. That is the idea about benchmarking. If care is not taken, it may set complacency for the company and it may result into arrogance. 3, many organizations tend to relax after excelling beyond competitor standard. Okay, because you're like, okay, I was looking up to this person. Now I have reached their level. There is nothing else to achieve. No, there is more to achieve at the end of the day. Okay? That is the idea about that. And the realization of having become the industry leaders soon lead to arrogance when considerable scope of further improvement remain. So these are some of the limitations that we can talk about in respect of benchmarking. And that brings me to the end of benchmarking. So keenly, the things we need to be mindful of will include the types, right? The advantages, the disadvantages, and then the key things that are involved in benchmarking. That's all. We're done. For those of you with the book, there are some questions there about benchmarking. You can look at it. I'm not going to consider that here. Next is value chain analysis. Now, as we are trying to benchmark ourselves with the best of the best, it means we need to do some introspection to find out which of our activities really add value to the customer, to the products, to the services. That idea about identifying the activities which really add value to the customer, to the products, to the service is what is referred to as value chain analysis. That's it. So according to Johnson and Scholes, or Johnson and Scholes, depending on the school you attended, value chain is the activities within and around an organization which together create a product or service. So traditionally, according to Michael Porter, we have what we call the primary factors, and then we have the secondary factors that you got to be mindful of. So the primary factors are inbound logistics. The inbound logistics include how we obtain our inputs. So the various processes that we go through in ordering inventories, receiving the inventories, and keeping those inventories in store. That is inbound logistics. If it is a restaurant, inbound logistics will mean how we buy food and those we buy ingredients, drinks, and various things that we use in the restaurant. If it is in the hospital, inbound logistics will include how we receive patients, what are the measures available on receipt of patients, and how we bring in doctors and all of those things. Those will be inbound logistics. If you are paying attention carefully to what I'm doing, I keep on telling you, whatever we are learning is applicable irrespective of the industry we are in. Operations has to do with converting the raw material into finished goods. So what are the processes in place to convert the raw materials into finished goods? And so operations in a manufacturing environment will be the production facility. How efficient and effective is the production facility? Are we using more renewable energy or less renewable energy? Are these production facility emitting toxic gases into the atmosphere or not? All of those things will be considered under operations. If you are in a restaurant, operations will deal with how the ingredients are converted into meals that will be served to the customers. That is operations. Right? If you are in the hospital, then operations will have to do with the processes that include when a patient gets to the hospital, you go do your BP, weight checking, going in and seeing the doctor, going to the lab. All those things will form part of operations in a hospital. Okay, in a school, operations will involve the teaching methodology, the syllable structure, the teachers, how we teach students throughout. That is operations. So the rule is the rule and it's applicable to all industries. Outbound logistics has to do with how we get the product to the final consumer. That is outbound logistics. That is how we get a product to the final consumer. So these are activities concerned with the storage of finished goods before sale and distributing and delivering of the goods to the consumer. That is outbound logistics. That's it. So again, if it is a restaurant, okay, someone's orders a meal, the kitchen has prepared the meal. How do we get the meal to the person? That's outbound logistics. How should the meal be packaged? How should it be sealed? How should it be covered to make sure that the way we envision it at the kitchen is the same thing that the customer is getting without any outward or external effects coming on it? Outbound logistics. Then we go to marketing and sales. This has to do with definitely how we create awareness, advertise, educate people about the availability of our service. So in a restaurant, outbound logistics could be an advert that they run, a promotion that they run. It could be a partnership agreement, because a restaurant can partner with a filling station and they say, if you buy fuel of X amount, you get a coupon to go and eat at this restaurant. Then the restaurant can also have something and say, hey, if you buy food of this amount, you get a free coupon to go and buy fuel in our partner filling station. All those things are under marketing and sales, how we get our customers. If it is a hospital, marketing and sales could be those things they do, free health screening. That's a very typical marketing strategy for hospitals. All right? Because you go, they say free screening. Now, if you had come to the hospital, that screening may have cost probably 100 Ghana cedi or 200 Ghana cedi, whatever. But then they will say free screening. So when you finish doing the free screening, the results will come. Then they say, oh, You are suffering this, you are suffering this, you are suffering this, you are suffering this. We need to do further test. That test will cost X amount of money. You need to buy this drug. This drug will cost Y amount of money. So free health screening is a typical marketing strategy for hospitals. All right. So it's not just like, oh, this hospital, this hospital is doing free health screening. Yeah, Obaya. That is a way to get you to the door, because you will not primarily just sit down and say, oh, let me go and do health screening. How many of you does that? That you are there now, you say, oh, let me go to the hospital and go and do health screening. But when you hear, maybe at your workplace or at church, right? Or, in your neighborhood, health officials come and say, oh, free health screening. Beobaya. So that is a way to get people to the door so they can come to the hospital, then we can take their money. That is the idea about marketing and sales, how we get our customers. Then the services refers to what is done after the product is produced in that regard. That is services. So if it is a manufacturing company or whatever, then these are the after-sale services: installation, repair, handling of customer complaints. All those things will be regarded as what? Services. In the hospital, the same idea about services will be there. What happens if you go to the hospital and then you are discharged? What happens? Do they call you? Maybe the hospital will call you, hey, Sister Ama, you came to do this. How far? Okay, you've been taking your medicines, medication. How far? That is called after sales services. Or sometimes you may even have a teleconference with the doctor. So you are at home, but the doctor will have a teleconference with you to check up on what is happening after you are starting to take the drug after 1 or 2 weeks when you were discharged from the hospital. You will get that kind of treatment depending on the money you have and the type of hospital you go to. Okay? Because in this country, you can't get many of those things. They discharge you, nobody check up on you and see how far with your with the outcome of your medicine. They will tell you, oh, you come for a review every week or come for review every 2 weeks, right? But in some other jurisdiction or well-developed private hospital, high end, which you have to pay for, you have that after sales services in the hospital where, you have the doctor, or maybe even as they have discharged you, you are taking the medicine. If you are getting any reactions, you can jump on a call with a medical doctor and then boom, you'll be able to have that in that regard. Yes, I was wondering if they do it in Ghana. Not primarily, but some of the hospitals could offer that in that regard. Some of the high-end private hospitals could offer that. Certainly, you pay premium for that in that regard. But generally, it's like almost close to 99%. Nothing like that is done. But it's something that should be done. Okay? It's something that should be done. I will gladly pay for it, right? I've gone to the hospital, I've been discharged. Then 3 days after that, the doctor calls me. I have a call with the doctor. Okay, I'm taking the medicine. This is how far it's going. That's after sales services, but that's why I said it depends on the money you have and then the kind of hospital you attend. Yeah, then they will attend to you like that. But that is the idea about services. So these are what Michael Porter called the primary activities. The primary activities. So you see that I have applied it to all of the sectors, all of the industries applicable, whatever, or as many industries, not all. So that's what I want you to understand, and that's what I keep on telling you. Whatever we've learned in management accounting, budgeting, variance analysis, short-term decisions, performance measurement, whatever we've studied, the question can be a hospital. It can be a manufacturing company. It can be a school. It can be a hotel. It can be a restaurant. It can be whatever. But the law is the law is the law. So these are the primary activities that we need to know about in that particular case. But Michael Porter said there are other activities that help these primary activities to do well. And those are the things referred to as the secondary or supporting activities, like technology, right? You could do after sales services well by leveraging technology, like what I was discussing a moment ago. If a hospital has to check on you or your doctor has to check on you after you've been discharged, then they leverage technology. Okay, so there are softwares like that available. So you will just schedule a call, jump on a call. It's not WhatsApp call. It's not iMessage, FaceTime video call. It's a primary software that you'll be able to jump on a call with a doctor, because privacy and everything has to be protected on that call. And that is possible. So the after sales service is possible because of what? Technology. So the amount or the leverage that the entity has with technology will help it in all of those primary activities. Then human resource. The expertise availability could improve or make it worse. So you can have the best production system in place, but if you have people who are not trained, who are not experts, who don't have knowledge in manning those equipment, then you may have the best equipment, but they don't know how to use it. So at the end of the day, we wouldn't be able to satisfy the customer. So these are some of the things that Michael Porter talks about when it comes to value chain. And the idea generally at the end of the day is to find out, okay, which of these can the entity focus on primarily, and which of them can the entity outsource? So it depends on the organization that we are dealing with. Some companies have outsourced services. So when you buy something from them, installation, repairs, and all those things, a third-party organization will look at it, not them. It's a decision because they want to focus on things that they think they have capacity in. Some companies don't have marketing in-house. They have outsourced that to a marketing firm to handle all their marketing issues for them. Some companies don't deal with outbound logistics, delivery. Nah. They will engage a delivery company to handle all the delivery for them. So like what you see Bolt, Food, Yango, and those things doing, it's a way of outsourcing. So you order the meal, the restaurant cooks it, then the dispatch rider goes to the restaurants to pick it. That's outsourcing. The restaurant doesn't have its own delivery people because that would be too much work. We know how to cook. Let's focus on cooking and outsource the ones that other people can do for us. But there is a final trap there. How much can you outsource? Because if you check, you can actually outsource everything. So how far can you go? So the best practice is just build, the entity will design and check its operations and find out which of the activities are core to their operations and then which ones they can outsource at the end of the day. That is the idea about value chain analysis. We are done. Now, this has not been asked yet by the examiner, so I don't know, maybe this semester I would want to do. All right? Even under the previous syllabus, it was something that the examiner asked at least, I think, once or so, twice. I mean, that's it. But it's an area waiting for you that you must know. Benchmarking has come like 2 times in 2 different examination dates, but which tells you that the examiner can repeat topics as well. So, but different aspects of benchmarking. So value chain analysis, an area that you need to understand there. So there are some benefits here on value chain, why we do it. So maybe let me just go through some of them with you. It provides the generic framework to analyze both the behavior of cost as well as existing and potential sources of what? Differentiation. So what are we doing in-house? So that if we are doing something in-house and it costs us more, can we outsource it so that someone can do it at a cheaper price? Then we outsource it. All right. So those advantages are there and disadvantages. Then we come to business process reengineering. Janet, this is the answer to your question. Business process reengineering. You see, the idea about business process reengineering is when you hear the word re-engineer, it's like, okay, we've been doing things for some time in a certain way. But at this point that we are in, we want to change the way we are doing things and improve upon it better. That is the idea about the business process reengineering. So one-liner definition, it is a fundamental rethinking and a radical design of business process to achieve dramatic improvement in contemporary measures such as cost, quality, and speed. That's business process reengineering. So you are going to be changing radically the way things are going to be done. And the reason you are doing that is primarily to improve upon your cost, upon the quality of your service, and then to deal with speed. So let me just give you a simple example in relation to some of the things that we did. So for instance, previously, those of you who have been with us for some time, you realize that every day, every meeting time, details have to be sent out, right? For every meeting times. But then there were problems with that, right? Because sometimes we send a meeting and people's email server is not refreshing. So some people don't receive the meeting until the following day. Or they receive it later. And so people will come back and forth in the group chat and will be like, oh, I've not received meeting details. So then we sat down and we are like, okay, that's too much stress. And then you realize that so on the live call, people will be distracting the live call. So some of you will be on the live call and you are reading the message on the page and people are asking for meeting details as though it wasn't sent. So we sat down and said, okay, how do we redesign this whole thing? So that's why we then adopted that, okay, you have one meeting detail sent to you once you complete your enrollment. That is the meeting details you will use to join all the class. So quickly, we resolve that issue. Now, it's not that, every time, time has soon, my assistant will have to pick up meeting details, copy, and then send to students. No. So that's it. Quality. Now there is no longer interaction in our call where, somebody didn't receive meeting details. We send the meeting details. We've reduced all of those things. That is the idea about business process re-engineering. You get the idea? So what are we looking at here? So let me give you another example here. If an entity is thinking about the way it's currently handling customer orders, it considers everything from the order coming in to when the product gets delivered. The entity figures out which steps are necessary and which one are just adding extra work. So that the ones that are adding extra work are JME. So that we can focus on the real issues that we need at the end of the day. What does that mean? On the overall, business process reengineering simply means making the process simpler and faster. That's it. Making the process simpler and faster for everybody. So what are the key features? 1, managers must consider the bigger picture and how processes affect each other. 2, individual processes should be considered integrated into a dozen or more processes. You get the idea? So you are going to understand that each process has an effect on other processes. So the one that you are going to be dealing with, how would that make other processes simple or simpler or faster or much difficult? 3, IT should be seen as a major tool to improve, streamline, or integrate processes. Awesome. Awesome. Again, just an example about business process reengineering. In our previous online portal, for instance, when people finish making payments, we will have to manually give them access to the course. In other words, we would have to manually do the enrollment for them. On our previous portal, which is the NhyiraPremiumUniversity.com, on that portal, that was our first online portal. That it wasn't like what we have now, right? So what happened is that once you completed payment, and even before people could make online payment, people go to the website, see, and then they would have to send a message, and then they make the payment offline. Then we did the enrollment for them. They realized that, oh, Charlie, no, it'd be too much work. So business process reengineering, what did we do? We decided to then design a new online portal with a mobile application, which is the portal we are currently using, the NhyiraPremium.com portal. Here, everything is integrated. So you select your course, make your payment, automatically your enrollment is completed, and you have access to the course. Simpler, faster. Everybody is satisfied. That is the idea about business process re-engineering. And the focus is, on the customer. That's all. We want to make the customer's life better at the end of the day. At the end of the day. Because so that any nuances, because imagine you make payment and they have to call the company again and say, hey, I've made payment. When am I getting access to the content? Bro, that's too much work. But if they make payment instantly, they get access to the content, they are satisfied. Because if you make payment, you have to call and say, I've made payment. When can I start having access to the content? Then it's like scam is coming inside and people will be scared. But now everything is integrated, so customers are going to be much happier at the end of the day. So these are some of the key features that we need to understand in that regard. So what are the steps involved then in business process reengineering? Number 1, we identify the processes which would need reengineering based on their impact on performance and customer satisfaction. So if you look at the example that I've been giving you about us, we identify, okay, people can make payments but don't have access to the course, and we are supposed to make the enrollment for them. Okay, people are not getting the meeting details if we have to send the meeting details on time. Okay, so how do we make sure people have access to the meeting details so they don't have to worry about it's not coming, it's coming, and they don't have to interfere with our live session? We identify the process or processes which need reengineering. 2, analyze processes, meaning understand the current workflow and identify any bottleneck in that. So if you remember, again, I told you previously we were sending meeting details every day for every session. Every day for every session. What is the bottleneck? That is why I said people email server is not set to auto refresh. Maybe sometimes they don't even know that you can even do that. You send the message, they have set their email to auto refresh maybe 3 days, or 1 week, they don't know. So when you send an email, it's going to take longer. Sometimes they see it the following day or they see it late. This was the bottleneck, and that is where the dissatisfaction comes in. They comment on the page, oh, class is going on, I've not received meeting details, me neighbor. Then they are interfering. That is called analyzing the process. Then 3, redesign. So you develop new process that eliminates inefficiencies and better align with the organizational goal. So from that regard, we're not going to send meeting details every day. You have one meeting details, you received it, and so all your sessions, just go pick that and you can join the meeting details. So what is the problem? What are the problems we have? Then we analyze what is the issue in those internal controls. Then we redesign a new solution for it. Once we redesign a new solution, we implement the change. Then you monitor and optimize. Because once the change is implemented, you need to monitor. Because one of the things about that once email we sent out with meeting details was that people were like, oh, I have to go into my mail ton every day. Then I'm like, bro, star that mail in your inbox. Star it. If you star it, the next time you go to your inbox, outbox, you will see starred messages. Click on star and the email is there. You can pick it. Or option number 2, copy it and paste it somewhere in a note that you can pin in your notes app so that every time you refer to it. That is called monitoring and what? Optimizing, so we get the best possible outcome. That is the process or the steps involved in business process reengineering. All right. So you see that some of you cry in your life. You are doing business process reengineering, but you don't know. Okay. So, because you look at something that is happening. Oh, I can stop doing this thing. How is this thing affecting me? Oh, okay. From now on, this is what I'm going to do. Then you implement it. Then you monitor it. So in your own life, you are doing reengineering. That is the idea in respect of that. All right. So what are the challenges when doing this? One, it is believed that radical change may be too expensive sometimes. So it depends on the thing that you are doing. Sometimes it could be expensive. Because when we were moving from InshiraPremiumUniversity.com, the old platform where I said people make payment and we have to manually finish their enrollment and all those things, to the new platform that we were on now, really expensive. Because if you are going to have that kind of systems that we now have on our portal and in the mobile application, there were a lot of changes that has to be done. Dedicated team designing everything from scratch. Because it's not like we were taking the existing platform and working on it. We were designing a whole platform. So sometimes, like that, very expensive. But it's worth it. 2, radical change may be too risky sometimes. Sometimes people want incremental change. I feel. But business process reengineering, I feel, we they do, like, we are moving from left to right. We are moving from north to south. So it's too risky. It's too risky. Because even one of the things about our meeting details, right? Some people were like, oh, it's okay. The everyday sending is okay because every day you receive the meeting details. So some people were still in that mindset that no, everyday meeting details is better for them. That's a risk because they'll be like, oh. 3, it may place too much emphasis on technology because you are removing a lot of inefficiencies, then you're going to rely on technology to automate a lot of things. It's good, but in some cases, technology has its own risks, right? Its own inefficiencies. So there are sometimes, even though our portal, when you finish making payment, automatically your enrollment will be done. There are sometimes, once in a blue moon, someone will make a payment, but the enrollment will not be done automatically. Probably because after the person saw payment successful, then they click the back button. So they didn't allow the system to auto refresh. So immediately you click the back button, then you have prevented the technology from automatically completing your enrollment. Then we have to do it online. So sometimes it may place too much emphasis on leveraging technology because you are trying to make things simpler, but it has some risks associated with it. It may focus too much on cost reduction. Yeah, because you are making things simpler, you are looking at your down 10 or your cost items, you may be trying to reduce too much cost. And the more you try to reduce cost, sometimes you introduce a lot of inefficiencies and a lot of dissatisfaction for customers. And then the last one is that it may not consider how dramatic change may affect organizational structure. All right? Because if you redesign how things are supposed to be done, some people may not be trained to do that well. Okay, so this is the idea about change management generally. In strategic case study, you will learn more about this under change management. And we have various models about how changes will be successfully implemented. Because people must be convinced that the current system you are using is not good. We have to change it. After the convincing, they must be trained. But there are some people, their mind is set in stone. It was sometimes they will be like, oh, Minieba, this thing, every day we should do this, every day we should do this. Born before computer, IT. We were doing this work every day, signing paper. Now look, they have brought some IT software. It's digital signature. I have to sign. And sometimes you are signing, the system, oh, what is this? Organizational culture. So these are some of the challenges, or if you want, limitations on business process reengineering. And basically, these are the things you must understand. In respect of business process reengineering, got some advantages and disadvantages here, which we have indirectly spoken about as well. That is all. I'm done. Janet, are you okay? I think you asked a question about this particular one. Let me know if it makes sense to you. Business process reengineering. So there is a simple question here in the book, right? Still coming from the book. It says, explain 3 conditions that may empower employees and junior managers to make operational decisions under business process reengineering. Okay? 3 conditions that may empower employees and junior managers to make operational decisions under business process reengineering. So you see the answer there. Employees need to have immediate access to information. Junior managers without financial background should be trained. Accounting information should be made simple and understandable. And the operating environment should encourage employees to take initiative. So these are the things you must understand under business process reengineering. So if you pay attention closely, we've looked at total quality management. We've looked at just-in-time system. We've looked at value chain analysis. We've looked at benchmarking. We've looked at business process reengineering as well. All these are 1 or 2 of them may be in that question 2B 10 marks area that the examiner may bring. But there are some other concepts there, like environmental management accounting, also something that we need to understand there. Then you can read that. I'm not going to go into that because of time constraints, but you can read those things there. If there's anything you don't understand, certainly you can reach out for assistance. Because I want to take you to some of the IT issues quickly, because as part of our contemporary issues, there are some IT issues we need to be mindful of. Technology and then sustainability even. So let me take you to sustainable cost management accounting, because in our syllabus now, sustainability, public sector, IT, ethics are thematic areas of the syllabus. That is why in almost every subject, we are smelling sustainability, we are smelling IT, we are smelling public sector issues, we are smelling ethics, because these are the thematic areas of the new syllabus. So it is spread across board, and they are just minor areas, especially sustainability like this. It's just a minor area. It's in your syllabus. You're supposed to know about it. You may go to the exam and there's nothing there, but you got to know about it. All right. So sustainability issue or sustainable cost management. Let me see if I can run through some few things there for us. Then we will wrap it up for our theory discussions. So sustainable cost management is a strategic approach aimed to achieve a harmonious balance between economic activity, social responsibility, and environmental stewardship within an organization's operation. So how do we ensure that we maximize the wealth of the shareholders? That's our goal. But at the end of the day, we don't harm the environment negatively, right? That is the idea about sustainable cost management. Couple of principles are available here that we need to know and understand. Principle number one is life cycle thinking. What does that mean? It means when an entity is developing a product, the organization shouldn't just think about, we have developed this product to make customers' life better and we'll make X amount of money. No. The organization must think about the impacts of the product, yes, what it will do to shareholders, what it will do to customers, and at the end of the product's life, the impact of the product on the environment. That is the principle of life cycle thinking. So that if we are bringing a product, but the end of the life of the product, it will become a societal mess, then we have to rethink it when we are developing the product. So that is why many bottle water manufacturing companies here in Ghana, they have changed the material they used for the bottles. Because previously, the materials that they were using for the bottles were not environmentally friendly. It will take time to be degraded. But then the life cycle thinking means if someone finished drinking the water, what happens to the bottle? That is called life cycle thinking. So this involves considering the entire life of a product, process, or service from raw material extraction and production to distribution, use, and eventual disposal. And so there are some of these companies that have even programs available that, hey, if you return their bottles, they give you some free drinks or free something, or they pay you for it because they receive them, recycle them into new bottles or newer bottles, and then they use it in their production process. That is what is referred to as life cycle thinking. Number two, total cost assessment. This principle states that, again, if you are looking at the cost of a product or a service, don't just look at the cost you are incurring to offer the service, but you must also look at the cost you will incur to repair any environmental damage of your product. That is called total cost assessment. That's the idea. So if we're a mining company, for instance, and you're looking at your cost from the management accounting perspective, we'll look at the cost we incur in preparing the site, doing the stripping, mining, and all of those things. But total cost assessment means, hey, if we are going to mine, okay, maybe there are residential people around us, so we may contaminate their water. We have to provide an alternative water for them. What is the cost of that? Okay, when we mine this place, we must landscape it at the end when we decommission our mining or machines and rigs. What is the cost we will incur on that to return the place to how it was before we came? So we are not just thinking about our cost of production, but we are thinking about the cost to restore the environment to how it was prior to our commencement of work. That is the concept of total cost assessment. So this includes the upfront cost of production, but also costs related to environmental compliance, waste management, regulatory fines, employees' health and safety, and reputation management. That is the idea about total cost assessment. As a second principle. Third, materiality and shareholder engagement. So, what does this talk about? Sustainability cost management recognizes that not all environmental and social issues are equally significant to every organization. So, when we are making disclosure requirements, having communication with shareholders and other stakeholders, we must make a decision as to which of the issues that we want to include in our annual reports. So, for instance, if you pick a bank, maybe like EcoBank, for instance, in their annual report, there is sustainability reports there. There is corporate social responsibility there, because they are reporting on how their operations is affecting the environment and the various actions that they have taken to restore the environment to how it was. An organization that is sustainable, that is environmentally conscious, will consider the significant issues that they have to include in their disclosure requirements when they are preparing their financial statements. Then certainly innovation and what? Collaboration. Usually, if an organization is going to be sustainable, then it must learn to innovate and collaborate with what? Other people within the industry, maybe even outside the industry. So for instance, EcoBank is transitioning to renewable energy, especially for all its ATMs, right? That is sustainable processes. But you can only achieve that if you learn to leverage innovation and collaborate with entities who are providing solar solution and leveraging solar technology to provide energy to businesses. So an entity must not just be there and be thinking about, yo, we will be doing it, we will be doing it. No, we learn to collaborate, because through collaboration and innovation, we will reduce the environmental impact, reduce our average cost of production at the end of the day, and guess what? Make more money for the shareholders. Because if we transition from normal energy, non-renewable energy to renewable energy, guess what? Our energy cost will reduce. Then we are tagged as environmentally friendly company. Reputation goes up. Our cost reduces. Who makes more money? Shareholders. That is the idea. So everything is actually, knitted together at the end of the day. And these are some principles that we need to understand about sustainable cost management. So it's an area or a question that the examiner can ask us that we need to understand in that regard. And the role of the management accountants, in developing sustainable practices, some few key issues there that you need to be mindful of generally. Then the final area will be technological development. Yes, IT issues. We use IT a lot in management accounting. There are softwares, blockchain, that are used now. So now the management accountant is not someone who's going to sit down and be thinking about how to prepare a report or be thinking about how to do something. You feed the data to a software and they can generate all of those things. So now the role of the management accountant is shifting from the mundane calculation workflow to using the results to advise management and provide or help management and the board to get the strategic design or determine the strategic direction of the company. So it is not about cost management accounting. No. There are softwares who will deal with that for you. Okay? There are softwares. Once it is designed, you feed the software with the data, the outcome will come. Now, the outcome from the data, how do you use it? So like calculation of variances, you're not going to sit down at your workplace and be calculating variances. What is that? Grab a calculator and be doing, we produce 10,000 packs of sanitary pads. Per our budget, it should have cost us $20, but it did cost. No, you're not going to be doing that, sister. If you are doing that at your workplace, I don't know though, but there are softwares who are doing that. So softwares will handle that and produce you the variance. Then you take the outcome of the variance, then you now analyze and interpret that to management. Then based on that, you can now design what policies, procedures, and things that must be done to improve upon the performance of the organization. That is why IT is central to the job of the management accountant. And that is why ICA is bringing IT. I think from next year, they're going to be trying to bring the examination level 2, also IT, then they are doing. Now, the whole of level 1 is computer based. So from next year going, they're going to be starting to bring in probably the level 2, and then by the time you realize it will be like SEMA, everything is computerized, so that you familiarize yourself with some of the things. Then when you go to the workplace, because the accountant's job is no longer akpe baba, the accountant's job is to think and strategize for the company. That's why the IT area is important. So Andrew, I said, so why are we learning it like that? Software can do it. We just do. No, but Andrew, if you don't know it, how do you interpret it? If you don't know how direct material usage variance was calculated, how do you interpret it? You get the idea? If you don't know how fixed factory overhead expenditure variance was calculated, how do you interpret it to management? And how then do you suggest to management what they must do? That's why we are learning it. But we are saying that the mundane, routine, basic calculation issues, the softwares will do that. So you will now grab that and use it to help management to make information. So you must learn it. Because if a software can produce something but you don't know the meaning of it, then we have to also program the software based on various indicators. So we must know how the calculation is supposed to be done, because we will then feed the software with the way the calculation is supposed to be done. Then when we give it the data, it will do the calculation. That is it. So we need to know. So a lot of benefits comes in using technology. All right. The provision of high quality and more standardized data, like I was saying, it's not now you are sitting down to calculate material price variance, mix and yield variance. No. The rule is there. Feed the system with it. Once you put the data there, the system will generate standardized, high quality. Okay. More timely and accurate reporting, increase ability to integrate diverse data sources, automation of more tedious high volume tasks, right? Reduction in the time spent by accountant generating financial information so that we can use that time for something else. Then the ability to disseminate information or financial information more widely within the organization. That is the idea about the benefits of the IT. But so there are some skirmishes. Okay, those are the risks associated. And the examiner can bring us into that. The first one is cybersecurity, pretty important in that regard. And as part of that, that is why they are bringing some ridiculous cybersecurity amendment. I mean, you look at the amendment that they are trying to bring. Sometimes you think about it, you're like, what's up? Very ridiculous amendments. Although the impulse is to deal with cybersecurity and some significant risks relating to using technology, it's a bit wild. It's a bit wild. I believe some of you have heard about the amendment. Some of you too, you don't care about Ghana. You are just there. Before you realize they have come to arrest you in your house. My day, you posted on your status your own picture. And the picture is communicating something else because of a text inside. then they will come and arrest you. So follow. But cybersecurity risk is one of the risks associated with IT. It's one of the greatest risks. Okay, so to prevent malware and ransomware accessing confidential data or disrupting operation, organization must put in place robust cybersecurity precautions. Okay, preventing of hacking and those things. Data confidentiality also creates a risk because now businesses are in the cloud. Who is having access to that cloud? That's the problem. All the phone calls you've made in your life and the text messages you've sent, whether video, text, everything at all you've sent before or even captured on your phone is available. It's somewhere. Maybe you even think you've deleted it on your phone. It's not deleted. Yeah, you cannot see it, but it is there. Sasemba, we will go there and they will get all those information. So data confidentiality is one of the issues when we leverage technology. And that is why it is always advised that you put in place safeguards to prevent unauthorized access to customer data and to comply with relevant legislation. So that is why in companies, PCs have passwords. And certain passwords or certain places, only certain people can enter there with facial recognition or, how do we call this? Fingerprint. So if you are not in the system as an authorized person, you can't access those records on the PC or something like that. That is confidentiality issue. So as an individual yourself, be careful because every video, message, call, thing you have ever done on your phone is there. So you got to be careful about the things you use your phone to capture, the things you receive as SMS, the things you send as SMS or video. Because as Mbana says, so phone nima, you have deleted, but the things are there. I don't know if you heard this. There was a time Apple made an iOS update. Then it turns out that many of the things that people had deleted were coming back. So if, for instance, say I had sold my phone to, say, Janet, my pictures and things that I had deleted when the phone was with me, because of that iOS update, the things were coming back. So quickly, Apple had to bring in a new software update and tell people that, hey, this is a security threat, they should install it, to install it so that they reverse it. That is what you must understand, because nothing gets on this device, any device at all you are using, that ever goes away. Nothing. And that is one key risk on technology. So on the private level, on the corporate level, care must be taken, because in the wrong hand, it can really affect. Pen drives cannot be connected to company machines. Yes, that's one of the things, because the drive can have a malware on it, and then boom, 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 it will spoil everything in that regard. So even some companies, your company's laptop, you realize that you can't visit certain websites. You can't install certain app. Some of you who work with, companies who take security serious, the company's laptop, you can't install applications. You can't visit certain websites. It's all actions that the company has taken to deal with cybersecurity, to handle data confidence. Because you can't buy a laptop. Company gives you a laptop, then you are using it to visit other websites, Pornhub and co, then they will be hacking into your system and they will affect the company because of your misbehavior. Next one, Digital solution is not infallible, and algorithm and erroneous coding could result into process fault. Yes, the fact that technology is good does not mean that it doesn't have its difficulties. It has. So everything at all has its own problems, right? Everything at all. And then internal know-how is required. Very important. People must be trained to use the technology in a positive way at the end of the day. These are some of the problems or risks associated with using IT systems by organizations. And I think that is all about that. Cloud computing is there, and the benefit concept of big data is also there, and then big data analytics. But these are some of the things on IT as well that we must understand in that particular case. I'm done, generally. Finally, maybe brush you a little bit on ethics. Okay? Because I mean, ethics, you people, you know ethics from your previous studies. Can it be ethical issues? It's the same idea here. The management accountant must have a certain character trait, behave in a certain way. Very important. And these are what we refer to as the fundamental code of conduct for professional accountants. So the first one is integrity, meaning be honest and straightforward in all your dealings. Be honest and straightforward. So if we are putting up a KPI to be used to measure the performance of divisional heads, make sure you are doing that in an honest environment, and not that you are going to be taking sides at the end of the day. You should be honest and straightforward in all your things. You stand up to what you believe. 2, objectivity. As a management accountant, you'll be exercising a lot of judgments. So for instance, you want to assess the performance of divisional heads. Which indicator should you use? Is it the RI? Is it the ROI or EVA? Which one do you use? Maybe your spouse is in a certain department, and if you use the ROI, they will make a higher returns and get a bonus. So you say, from today, we will exercise everybody's performance using ROI. That is, you are not being objective. You are biased. You are being biased. That is the idea about objectivity. We're going to be exercising a lot of judgment. We are determining salary. You don't just speak realistically. We are determining the standards to set in each of the departments within the organization. You don't give one department a higher standard and give another department a lower standard because you know somebody there or you have a relationship with someone. No, you got to be objective. Be straightforward. Don't allow bias, conflict of interest, and undue influence to impair your professional judgments. 3 is professional competence and due care. As we know, you got to have the requisite skills and expertise to do what you're supposed to do. So you cannot be in the cost accounting department or in the accounting department and say, hey, we receive an order. So maybe you work for a company, all right? And they receive an order to do something. So maybe let's say you work for an advertising company. So they receive an order to, print some billboards of a certain size, do some flyers, and also maybe some books. This is the order you've received. You don't sit down and go to your normal standard cost and say, oh, it will cost this, it will cost this, it will cost this. No. Professional due care should tell you that. Professional competence and due care should tell you that this is a special order. In special order costing, what do we use? We use relevant cost analysis. Because if you use the standard costing system that you have in the organization, you will give an estimate to the customer at a higher price. And if that customer goes to another advertising company and they use relevant costing, the price will be cheaper. And it's not that you are giving priority or premium quality. It's because you are charging the person irrespective of what you are doing. That is called professional competence and due care. So as a management accountant, you help the company. That's why you are learning competence. And if you charter, you will continue to study professional continuous development. Okay? You got to continue to study. So you are always up to date. Oh, me, I'm not going to do management accounting. If I finish the ICA, I'm going to do something else. We don't care. You have to be competent in whatever you want to go and do. Then the fourth thing is confidentiality. That's the management accountant. As management accountant, we're going to be coming across a lot of essential information about the organization, because we're going to be on the managerial level and sometimes even get the opportunity on the board level to meet with some board of directors if we are going to interpret what is happening about a policy they are doing, a program that they are doing. So you're going to have access to a lot of essential information. But you cannot disclose that information to third parties without husband or partner says, "Oh, honey, how was work today?" And we're like, "Oh, work was good." Is that all? You know, sometimes people ask some questions I don't understand. How was work today? The person say work is good. He say, "Is that all?" Because they want the details of your work. Okay. Then you sit down and start, today, hey, this company, can you imagine there is a project we are coming to undertake and the investment, the cost of the project, and nyanga. Because you finished doing investment appraisal and then cost analysis sheet on the project. Then you are telling your spouse that, your girlfriend, your boyfriend that. Who asks you that you should tell them? Oh, it's between my partner. My partner is my best friend. Your partner, who is your best friend, also has a best friend. So they will take that information and go and sit somewhere else and say it. Or even if they never say it anywhere, if something should happen and you people have to go your separate ways, the things about your work, secrets that nobody is supposed to know, and you know, you've now told them, and they can use that against you and be spreading it across board. And untina, you don't talk about your work in the house. So you get home, honey, how was your day? Oh, my day was good. What really happened? Yeah, normal. We went for a board meeting for a project that we are undertaking, yada, yada, yada. Don't give a details about it. Okay? There are better things to talk about. It's called confidentiality. But some of you can't keep your mouth shut because you talk. Oh, my partner is my best friend. You there continue divulging and giving out corporate secrets. Then you start talking by heart. Confidentiality as a professional accountant. Got to keep your mouth shut. So, what circumstances can you speak? Number one, the disclosure is permitted by law and is authorized by the client. So if at the end of the period you're supposed to send some internal report to Bank of Ghana or to a regulator or something like that, and your client has given you the green lights to be sending those reports, then you do it. It's not like you are disclosing the company's information to that third party. It's permitted by law and your company has authorized it. Okay? Or there is a professional duty or right to do that. So you have a professional duty to do it, then you do it. Or the thing is something that is illegal going on within the company, then with professional and legal advice, you can report. This is where whistleblowing may come in. It's not like you are selling your company, but then they are doing something illegal. But before you go and whistleblow about something, you must seek professional and legal advice. Professional advice from ICAG, legal advice from your lawyers. So that in case the company comes after you for breaking the confidentiality code and telling people about things that you're not supposed to tell them, you have a legal advice. You know how to navigate that. So that is the idea about confidentiality. And it's a serious issue. Serious issue. There are times I go to the salon and you hear the conversation that people are having at the salon. Like it's crazy. It's crazy. Like, you're like, no, you can't discuss this at the salon. But they'll be talking by heart, no measure, no corner, no nothing. Are we by heart? Confidentiality. Look at this girl. Partners cannot create a legal relationship in law. So that information cannot be used against each. Really? Really precious. Really? Really? The information can be used against you. Right? There have been various circumstances. You've seen about people who have divorced. And after they've divorced, I mean, if many of them don't have brain and they don't have maturity, you see the man saying certain things. Then the woman was also saying certain things. And sometimes they go into their professional work. And they say, if you are not careful, I will tell everybody what you did in this company. Hey! How did the woman get access to that information? Because the ensaka craft and the trimuno na adwena bete. I shall say kasa by heart. Okay. I said, yeah, it can only happen after divorce. Yeah, but divorce is something that you have to, it's possible to happen. Do you get the idea? So you just have to be careful. The whole thing I'm saying is that don't tell people things they are not supposed to know about. Nhyira, which salons do you go to? Oh, you want me to disclose? Oh, that would be private issue. I wouldn't want to disclose for private reasons. But I do my nails, right? I do my nails. So I don't cut my nails. I don't know. If I do it myself, I end up cutting myself, right? So I'll be bleeding. So I go to the salon for my nails, manicure and pedicure and wash my feet and those things on a regular basis. So at least every week or two or so I go and that's done. Because I can't do it. If I do it myself, I get cuts and it's not done well. But the nail technician can do it well so that my nail will be nice. You see the thing? That's why I go. I thought you've been No. I don't accompany anybody yet. Maybe in the future I'll accompany somebody to go, but now I go by myself. I'll see you at DB. No, it's not about DB. No. There are things that I just want done well, so you just get it done well, that's all. It doesn't have to do with DB, right? There are things you just want to get them done well, so you get them done well. It's not about DB. I'm not DB, Charlie. Yeah, cause I told if you're crashing, I ban crying. So it's not about DB. It's just that there are things I want them done well. Right? I'm saying my fingernails. I can't do it myself well, right? But the nail technician does it well, nicer. And it's beautiful. Do you get the idea? So it's not about DB. It's about just getting professionals to do my things for me. Yeah, Andrew is acting like he has not gone to the salon before. But you go to the salon, you go to the barbering shop for your hair. And then on Trafina, you see that thing? So it's like that. It's the same thing. Do you get it? It's the same thing. Then the last thing is professional behavior, meaning that acting in a way that doesn't bring shame or discredit to the profession generally at the end of the day. So these ethical issues, we must understand them as well, because we may have questions about them in that question 2B or question 3B area of the syllabus. And in addition to the topical theories that we spoke about, these are some other theory areas that we need to be mindful of. And I'm going to wrap up around here today with our discussion. And as I mentioned, the strategy is simple. You get to the exam hall, you're going to read all the questions, right? And answer the theories first. That's the strategy. So you answer all the theories. As I said, we are expecting 65-35 or 70-35 in the November examination. That's a strategy for expectation. So give and take, it means we're going to have about 30% questions on written or comment. You don't need any calculation. You are just writing English. It will read all the questions and you are going to be answering all the theories first. From there, based on your understanding, you can start approaching the calculation areas, right? But remember, this is management accounting. So one of your enemies in the exam hall is going to be comprehension, your ability to understand the English language. Like what we started with that Andrew asked, and I mentioned that the for semen. Do you get the idea? So it means if you don't have the right comprehension or you misinterpret the English, then you're on your way to getting it wrong. And we've been using the English language. I've been emphasizing on this over and over again. And so take time to go over some of the thematic issues, especially using the practice question course, right? To go through those practice questions and the short-term decisions, some of the specific questions that we solved, which had complexity in the language. In the practice question course, you will see them there, and the variance analysis, and the budgeting, especially some of the stories and the way we answer the question, because the examiner is likely to bring some issues in respect of the functional budget preparation or the preparation of the master budget, with some complexities in respect of the way the trade receivables and the trade payable will be calculated, right? So the examiner is likely to do that. Now, the reason why those complexity could be there is because people may misinterpret the English language and will not have the right comprehension. So please, you know that already. Certainly speed and accuracy, right? Time is going to be your second enemy in the exam hall. I know by now you might have done and killed that spirit to a large extent, using the practice question courses, solving the question yourself under time, then you review the solution. So from now till Tuesday that you're going to be writing the paper, please clean up the English language comprehension a little bit, polish yourself up a little bit, and then the speed and accuracy part. Because if care is not taken, get ready to stop work, back off 3 questions. Right? Back off 3 questions. And you know you have failed the exam. You know. Because sometimes deep down, by the time you come out of the exam hall, you know your outcome already. But how do we prevent that? So get your English right. Work on the speed and accuracy part. If there is any calculation question that you are looking at and you realize that no, it is taking you more time than it's supposed to take you, stop it and go to somewhere else, something else that it will do. But all that will mean that you will read through the questions well and start with what you can do best first, starting with the theories, then you transition to calculation. Please, if what we are expecting the examiner is going to do it, which is at least 30% of the questions on theory, it's an area that you can really work well. So if you read well, go over the discussions we've had today on those theory issues and the theories in the various topics well, give and take, if the examiner is going 30, that means that you can get 20 or above 20 of that. And if from the theory alone you can get above 20, then you're going to be in a comfortable lead to definitely pass the examination at the end of the day. So that is why we are optimizing that. Be strong in the theories, answer all the theories. As we say always, the only thing is that do not answer two separate questions on the same page. In other words, you cannot answer question 2B and question 4A on the same page like this. No. But you can answer question 2B. After that, you leave 4 lines and go to question 2C. That's allowable. Then you are not under obligation to answer questions also in any particular order. No. All you need is answer the ones that you can. But then this is where the problem comes. People will say, oh, Nhyira, so behind the answer booklet, you are supposed to write the questions number in the order in which you answer them. Yeah. Write something there based on the first ones that you have answered. That's it. So you are not under obligation to answer the questions in any order. So if the theories are going to be in question 2, because per the thing, all question 2 may be theory. All other things being equal. The whole of question 2 may be theory, 20 marks. Maybe theory, 20 marks. Then question 5B may be a theory. Question 3B may also be a theory. So it depends on how the examiner wants to structure himself out. Whatever the examiner does, go to fresh page, each question. So if it is question 3B, just do question 3B, answer the theory. If the next theory you want to answer is question 5A, go to question 5A. Question 5A is not theory though, I'm just using it as an example, and answer. You are not under obligation to answer questions in any order. These are the things you must understand. So if you can work on that strategy, work on your comprehension before Tuesday, and then clean up the speed and accuracy issue well, all other things being equal, you may be able to attempt probably a little over 4 questions after the 3 hours is over. And by the grace of God, that should be able to get you the pass mark so you can pass the examination. The truth of the matter is that you cannot answer all the 5 questions completely. That's going to happen. But the way you get yourself closer to that is how you approach the whole exam. And Nuntina, we are saying answer all the written questions that you can do best first. From there, follow by the calculations that you can do in that order, paying attention to English language, paying attention to speed and accuracy. And if you can do this, you should be able to pass the examination. And optimizing your memory level, I think I've mentioned this in other courses. It means that your mental state is going to be key, okay? And then your emotions will be important before and during the exam especially, okay? If you are afraid, you're going to fail the exam. Because when you are afraid, you're going to be panicking. Nothing is going to stick. You can't remember anything. Right? So we mentioned this in the public sector. Those of you who were in the public sector class, we mentioned this. So it's okay to feel ill-prepared a little. It's okay to be fearful a little. But God didn't give you the spirit of fear. He gave you the spirit of power, love, and of sound mind. You have it. So leverage on that sound mind. Relax. If you are tired, sleep. Some of you, you've been learning Tuesday, Monday evening. You will learn in the morning, then you go to the exam and go and do mitonko, then you fail the exam. Sleep. This is the time that your brain has to work well. And one of the ways your brain works well and your emotions and you become more productive is the quality of your sleep. So please, sleep well. I'm not saying sleep for long hours, because quality sleep is not about the number of hours you sleep. It's about the quality of the sleep. Because some of you can sleep for 9 hours. When you get up, oh, body pain, worry. In other words, you have body pains after sleeping for 8 or 7 hours. You know why? It's the quality of your bed, quality of your pillow, quality of your bed sheet, and your state of mind when you were going to bed. So those are the things you have to fix to have quality sleep. So your emotions is very important. And that is very important to me, equally as the main syllables and then the mindset in the exam hall. Because if we cannot get rid of fear, some of you are beginning to doubt your capacity to go and pass the exam. And it's a still small voice that is speaking to you. Hey, will you pass this exam? Hey, are you sure you're not going to fail this exam? It's a still small voice. And the more you give life to it, the more that voice amplifies and it becomes louder. And if you're not careful, the day before the exam starts, that voice is going to be bigger. And it will be like a man standing behind you, overshadowing you. And if you're not careful, nothing can come out of that exam that will be positive. So please, guard your mind, guard your heart, stay in the realms of the spirit, understand what is going on, be positive. If you are tired, sleep, freshen up and sleep. Okay? I was telling the PSA people, maybe Sunday, go out and do something nice to relax your brain. Take your spouse and your children or girlfriend or boyfriend, whatever the heck, go out somewhere and go and relax a little bit. Because a relaxed mind will bring everything you have learned in the exam hall. That's all you need. So get a relaxed mind so that you can remember everything in the exam hall. And that is very important to me, in addition to all the discussions that we have done. If I cannot get you relaxed, then you may go and fail the exam. So please, whatever you will do, relax yourself. Let your brain calm down so that you can understand and remember the things. I say this always. You are bathing or you are lying on your bed. Then all of a sudden, something that you couldn't remember some time ago is just coming, word for word. And it's just coming. Why do you think that happens? It's because when you are bathing and the water is pouring down on you like that, you are relaxed. You are not thinking about anything. You don't have any problem. You are not anxious. When you are lying on your bed like that, you are relaxed. You are not anxious. So because you are relaxed, your brain just goes into its shells and bring up everything. And that is a mental state that every individual must have to excel in the examination. So beyond the calculation for absorption costing, activity-based costing, whatever costing that we are going through, get your mind right. Nobody can do that for you. Yeah, we can pray for you, assist you in prayers, but it is you who have to deal with it and deal with those things and call the things that are not as though they were. So you must make that decision and move from negative to positive, fear to sound mind, negativity to personal motivation, so you can pass the examination. So that is what I would say. And those are the auxiliary issues that you must understand when it comes to your examination, and by extension, how you can optimize yourself to pass the exam. So that is it about that. And I'm going to wrap up here today. As always, I'll be on standby. So anything that you have, maybe you are looking at a question that you have a problem or something like that, and you want to pick my brain on something, don't hesitate. You send a message or can jump on a call with you, and then we can discuss it so you can go and pass the examination. It depends. I'm yet to confirm something, but probably we will have a session, a fireside chat on Monday evening. The exam is on Tuesday, right? So on Monday evening, probably we'll have a fireside chat. It depends, because I have to confirm a few things, because next I'm getting myself into some few things over the weekend for the next 2 weeks. So I would have to check if my timing will be permitted. Then we could have some fireside chats or a fireside chat on Monday evening for the Tuesday. And it will be to go over some of the thematic areas that we've spoken about and crystallize some of the discussions that we've done to put you in the position to go into the exam hall and pass the examination. So that is it about that. And this is what the Lord has made. We wish you all the best as you go into the exam hall. Please steady and be the best.